Hey, everybody, welcome back to the Financial Advisors Workshop. This is the show where we talk to people in our industry. Most of the folks watching this are financial advisors. I'm a financial advisor, and we want to showcase the great people that do great work in our business for all the wealthy families and some not so wealthy, helping them become wealthier. And so we have a great advisor with us today who's got some really interesting backgrounds, and we want to showcase him and learn a little bit more about what he's doing and how he does it. Sam Brownell is the founder and managing director of stratuswealthadvisor.com, and you're out in Washington, D.C., near the Baltimore area.
Yep.
Welcome, Sam, to the Financial Advisors Workshop.
Great. Yeah. Thanks for having me, Brian. I'm excited for the conversation.
Great. Well, so are we. And you've been an advisor for 10 years, which is, moderate experience. I mean, some folks that we interview are 25, 30, 40 years, but that's because you've done some other things in your career, which actually really are a great part of your story. So why don't we hear from you, Sam, about what you did before you got into our business and then what you're doing now. All right. Kind of lead us through that progression.
Yeah, sure. So I came out of undergrad and went to work at a bank in San Francisco, Jolson Merchant Partners. And I started on the trading desk there and traded some equities, and then moved into some derivatives, and then got into risk management. So, if we had proprietary traders that were putting positions on or carrying them overnight or for a couple of days, we would try to hedge that risk. And then I moved from there into the investment banking part of it, doing research. And it was a good experience, I would say. And I think it was one that helped me understand a little bit more about what I wanted to do. I mean, I think maybe like a lot of your listeners, it's easier to figure out what you don't want to do than what you actually do want to do. So, as I got farther along in the investment banking world, I realized that what I was really doing was just helping people with lots of money, hedge fund, private equity folks, make more money. And what I really wanted to do was be more impactful on the individual level. And while I was at the investment bank, I went through and got my CFA certification. So I had a good background in terms of valuation, but had gotten a couple tips from some folks that I knew that there was a lot of work to be done in the private valuation space. And so that then led me to think about how I could help business owners of local hardware or jewelry stores, pet store owners, places like this. They built something, they worked really hard, they put a lot of money into it. How are they going to plan for their future, especially when one of their big assets is a liquid asset?
Nice. So in that other business that you were involved in, you learned some activities that you worked with companies on that you've now brought into your current business that have helped in the private client side too. Let's learn about that.
Yeah. So I think a couple of big ones were obviously the valuation piece of it is how do you value a business and what is important to think about when you're doing that. Part of it is how do you make something more marketable? And if you've got a business, how do you make it more marketable? How do you make it easier for somebody out there to say, hey, Brian, I think what you've got is great. I'd like to get involved with that. And I'd also say that when it comes to any type of investment banking work, there's a certain amount of figuring out where your niche is and trying to go after it. We did a lot of work in San Francisco, obviously with tech. So that led me to, okay, it's good to have an expertise, right? I wasn't going to be the investment banker for somebody who was running an agricultural firm, right? It was tech and specifically technology hardware. So really drilling down and getting a deep penetration into a certain market was a really useful skill that's carried over into my current career.
Okay. So it's valuations and succession planning, which is work you did on the investment banking side, but that's really transferred over to this practice as well.
Yeah, correct. And it's one of those things that it's inevitably coming, and you can put it off as long as you want. But like so many things in life and in our work as advisors, it's those transitions that get people really worried and where they need advice, whether it's selling a business or getting divorced, these are things that come up. I'm even retiring, right? It's a huge change for a lot of people. And so that's where I feel like folks in our position can offer a whole lot of value.
Exactly. Well, great. So, all right. So now you did that business, you got out of that business, and you're in the financial advisory business. Let's tell us about the last 10 years then. Give us where you started and what are you doing now? Let's hear that story.
Yeah, sure. So I got started, interestingly enough, I went to get an MBA at the University of Maryland here in the DC area, which is part of the reason I ended up in this area. And we had a number of classmates from all over the country and the world, really, but had a couple folks who were actually there because they were next in line to take over a family business. And when they knew that I had come from an investment banking background, they got to know me, of course, and we were friends, but they had asked, have you ever done this with a private business? And I said, well, no, actually I haven't, but silly me, right? How different can it be?
Right.
So that then led me to start thinking about, well, if these people need help, I'm sure there are other folks out there that could use the help. And that really led me to start thinking, do I want to continue in the investment banking side when I get out of business school, or would it be better to go and try to serve more of your homegrown independent business owner who isn't going to necessarily walk away with hundreds of millions of dollars, but is going to need that $2, $3, $4 million as a really integral part of their retirement plan.
Yes. All right. So, okay. So then how do you work your practice now? And all that information, tell us about your firm.
Sure. So Stratus Wealth Advisors is the holding company. We have 3 operating companies under it. One is your traditional RIA, right? We're a fee-only investment manager and financial planner. We do a lot of work with individuals and families. And of course, families are a lot of times tied into the family businesses we work with. Then we have another business that does valuations. So its role is to solely do business valuations for people that need it. And it could be for any number of reasons. It could be because there's a transition. It could be because an owner died. It could be because there's a buyout happening and between partners and they need to get a valuation so that folks don't argue too much. It could be a parent gifting to a child, or granting, an owner granting to an employee that they want to keep on. So lots of different things that we do within there. And then that leads into that third part, which is the succession planning piece. And that's where we're really laser focused on making sure that these transitions take place and they take place well. And it's kind of interesting, Brian, because we really do in some ways have a nice funnel into the RIA, because we're working with these folks along the planning route. And then there's ultimately a liquidity event. And of course, at that point, if they're working with us and they don't already have another advisor, there lots of times will say, hey, what do I do with this? I've got $5 million. How do I make this last the next, 20, 25 years and potentially build wealth for future generations?
Right. So now that you got, I think, about 60 million under management, is that correct?
Yep.
Okay. And much of that has come out of that other practice, hasn't it?
Correct.
Business planning, succession, all that. Good. So then once you come up with those solutions, how do those solutions look? Like what kind of solutions? And then how do you run your firm in the sense of where do you custody and all those kinds of firm issues that financial advisors deal with?
Yeah. Well, we just went through a big switch. We just moved over to Charles Schwab, and as anybody who's switched custodians knows, it's a process. It doesn't matter if you're moving $6 or $600 million. It takes a lot of legwork. So I'm lucky that I have some staff that works really hard to do a lot of the stuff on the back end and don't mind getting involved in some of the details, because it does take time. And I think that we're looking at providing these solutions when we come in from the succession planning side. It's really about maximizing that net value, right? I can come and tell a business owner that their business is worth $10 million, but if they don't do that right, it could be, depending on what state they live in, right? It could be 37% on a federal level, and it could be 8 or 9, 10% on a state level. And, you could end up giving away 40, 50% of the business value just in terms of taxes, not to mention the fact that the more people, the more hands that get involved in the pot there, right? Lawyers and accountants and investment bankers and all these people. The fees and taxes are a really critical element to put into the plan. And so one of the ways that we really like when we build, especially evaluation for succession planning, we reduce it by estimated transaction costs. And then we reduce it by what we think the tax burden is going to be, because like anybody listening today, you can't do any planning based on gross, because it's just, now you're just fooling yourself and particularly your client.
Right. Exactly. Okay. Well, good. So do you do a financial plan and obviously look at opportunities to make sure that the client is going to have the proper cash flow, that is proper. What kind of tools do you use to do those things?
Yeah. So we use Money Guide Pro as our financial planning tool, and I think like a lot of these programs, it's useful up into a point, but then you have to develop your own models inside to get more specific. And so first thing I would say is I would encourage anybody out there, just because the program is there, don't take it at face value, because each client is going to be slightly different. And particularly if they have unique circumstances, right? They're a business owner or an athlete or in some regard, not just a W-2 employee. And so that becomes a really important part of the planning, is to figure out certain things, like most of the people we work with have the vast majority of their net worth tied up in not just a business, but many of them own the real estate where they operate. And so it's thinking about things like, okay, how do we not just monetize the business, but are we going to sell the real estate? If not, are we going to set it up as a triple net lease? That could be a really nice stream of income coming in during retirement for folks. Life insurance becomes super important in these cases, especially permanent insurance, so that there's some type of cash value that's being built up, because, God forbid something happens. It doesn't even have to be death, but, some type of disability. How's the family going to get liquidity? Right.
Right.
And that becomes a really important part of the planning process.
Right. Good. Okay. And then in many of the families you work with, you're doing all these other kind of higher level planning issues with. Do they also still have concentrated holdings in stock as well as real estate sometimes? How do you handle all? Okay.
Yeah. And it's interesting because it especially when you start getting into the private business side of things, it can be in some ways even more challenging, right, than somebody who's inherited, let's say, a large concentrated position, or maybe they work for a tech company and they got some shares in the company, was fortunate enough to go public, and now they've got 90% of their net worth in one stock, because you get a lot of these family businesses that 3, 4, 5 generations, and there are a lot of people that have their hand in the business and various ownership, and some of them are voting rights, some of them have no voting rights, but they're all there, and that becomes a huge part of their net worth. And so, you're right. Trying to figure out how to diversify away from that becomes big, especially if they're, a lot of times these folks may be in their 40s and they're not ready to liquidate their ownership position in the company. So they're got to start looking at other ways. Where are we putting cash that is more liquid than a business holding or a real estate holding?
Yeah. So have you done much work with restricted stock issues, 144 transactions like that?
Yeah. So we don't tend to run into it. We don't tend to run into a ton of that in our work. We've definitely seen it. But ours tend to be more around just, we've got a couple generations that may own a minority interest, let's say, in a privately held company, and we have to figure out how to manage around that, and how to build a strategy that allows somebody to build net worth outside of this very illiquid holding.
Yes. Interesting. Well, good. And what kinds of investments do you put the liquid as you diversify the more liquid in? Are you running money or are you using managers, platforms? Tell us how you actually invest the money for these insiders and other important people.
Yeah, no, it's a good question. So we tend to keep our client base fairly concentrated. We have probably 20 to 25 households. So we're definitely doing some more advanced things because we're talking households with $3, $4, $5 million or more. And so we've started to do a lot of direct indexing, and we're using a sub-advisor to help us with that, where we run the strategy, and then they're the ones who are actually doing the implementation and the buying and selling. And we did that for two reasons, Brian. Number one was because it was a cost saver, right? Instead of having to pay us and then pay another third party, a mutual fund company or a hedge fund or something like that to do it, we can go directly to the stock market or to the bond market. And because of the fact that our clients tend to be larger, we're not moving $20,000 here or $25,000 there, and taking haircuts in the bond side. We're moving larger positions, and that's helpful. The other part about it is, from a tax perspective, we can really control when gains are realized. And mutual funds, as everybody knows, have been great, but from a tax perspective, they can be difficult at the end of the year if it's a good year and the managers are trying to reposition, or if there are some issues with people needing redemptions. And so you might have to take a tax hit, even though you haven't done anything with your money. And we find that a lot of our clients appreciate not having that. Oh my goodness, I've got a $200,000 gain. Where did that come from?
Right. Yeah, there's a lot of weird things that happen to corporate executives and private companies and that kind of thing that really require specialized knowledge. And obviously, it sounds like you have that for sure. Great. Okay. So, what are some other unique things about the practice? You have specialized, executive planning. You work with tax issues, succession. Anything else you want to share with us?
Yeah. So I think two things is the estate piece is critical, right? We're not lawyers, but we certainly get, when you get involved with these more complex clients, one of the first things we do in any succession planning engagement is to basically just whiteboard out, what are the assets, how are they owned, how might they get transferred, and how does cash flow between them? Because you might have a business that has 3 or 4 different locations. Each of the locations is owned by an LLC that is not the operating business. And then you may have other family assets, whether they're private residences, whether it's expensive. Sometimes you get into stuff like jewelry or other tangible goods, cars, and you just need to know how all of these go. I mean, we've had clients that have also had their main business, they've owned the real estate, and then they've had side businesses where, hey, they bought some land and they wanted to start a horse farm, or they wanted to build a golf course or something like that. And so I think in those situations, it's really important just to try to get a very good picture of what's out there. And in our perspective is to try to simplify it as much as possible. Obviously the more holdings you have, it's going to get more complicated, but many people have gone kind of overboard, and they're not even really aware of the fact that they may be still paying a loan to a deceased relative's estate. Is there really a point in keeping that open anymore? Or should we find some cash and just shut that down so we can close that estate out and get that piece settled? So now we're dealing with less balls in the air that we're trying to juggle. So for us, that becomes I wouldn't necessarily call it fun, but it's a very vital part of what we do.
Right. So let me ask you, Sam, this is such unique work and interesting work. Have you lost any clients since you started as an advisor?
So we haven't, and I think it's part of it is because not every client that comes to us is going to ultimately become an investment management, financial planning client. A lot of the clients that we work with have come from other advisors. And we're very open with advisors and say, look, if you have a succession planning or valuation issue, please don't be afraid to call us. We're not here to take your AUM. We're here to help you. And, we talked before we came on, Brian, about how those of us in this space really need to support each other. And that's one of the things that we really try to do is if somebody comes to us and says, hey, can you help this client of mine? They're getting a little bit older and they're sort of slowing down and they're thinking about transitioning their business. We're happy to do that because it's not just work for us, but ultimately we know that liquidity event will be good for that advisor down the road, and that working relationship then that we've built will come back and pay dividends in down the road.
So you cooperate with other financial advisors to provide special services, but only really do the investing for them if they don't have another financial advisor. So
yeah, exactly.
For advisors, you protect other advisors on their clients, but do unique services for them that they wouldn't normally know how to do on their own.
Yeah, right. Exactly. So we can fill in with that valuation succession planning piece that the advisor may not have the capability of, but now they've got somebody who they can go to and say, yes, we can handle you as a client because we have somebody we can work with that will help you with these more specific requirements like valuation and succession planning.
It sounds like really a great business. At FourStar, we do a lot of work with insiders of public companies, but less with private. But we realize that the way it's so specialized that people really need that advice and really need that service, but it can only come from someone that really understands that area. And it sounds like you really do. And in the areas that we're in, we really do. And so you do tend to lose less clients, right? Because it's such a specialized area. They know that the average financial advisor doesn't know most of this territory.
Yeah, agreed. And I think that's part of what's fun about it is that you're putting together each puzzle is a little bit different, right? It might be in the same area, it might be the same color, but it's not. It's shades of gray, and so people could be even in the same industry, but every business, every family is different, and so they're going to need a slightly different solution to the problem.
Right. So Sam, from your experience, do you think that some of the knowledge that you have that you brought into the financial advisory business in advising private companies and executives and their families, is this stuff that others could learn, do you think?
Yeah, no, I think so. It's certainly one of the things that we have really found to be useful is not just to focus in this area with family businesses, intergenerational wealth transfer, stuff like that, but we've gotten fairly specific in the industries that we work in as well. So we do a lot of work in lumber and building materials, independent hardware stores, independent home centers, and then a lot of the ancillary trades, architects, engineers, plumbers, HVAC, those types of companies. And that's really been helpful too, because even if you have the technical knowledge, right? And so along with the CFA, I also have a CVA, which is essentially the private market equivalent of a CFA, right? So it's a valuation designation for valuing private businesses. And a lot of advisors out there can go through that program. It's challenging, but you can get through it and you can learn the technical skills. But then you're dealing with businesses, and so it can be very helpful because it's not the same as a public company. Obviously, it's a lot harder to dig up the information because it's closely held, and a lot of times there's a tremendous amount of emotion swirling around because you're talking about a family. It's parents and kids and their kids, and everybody's squabbling over something or other, and so knowing the industries can really help because that can help establish some of the expertise that you have. So if somebody comes to us and starts talking about their company in an industry like, let's say, building materials, we're already well aware of what the average balance sheet should look like, let's say. And so we can ask very good questions. And I think that probably goes for anything you're going to get into in this industry, but really going a little bit deeper than just gaining the knowledge, right? I mean, all of us know how to put together financial plans, but can you put them together for divorcees or widows or whatever the case may be? That's a little bit of a horse of a different color, right? From the Wizard of Oz.
Yeah, that's right. Well, that's fascinating. Yeah. So others can learn this business, or they could just lean on a partner like yourself or another firm. It seems like there is so much specialized knowledge, but you brought it all back to dealing with people, and people really are what this business is all about. And, some people on the outside might look at a wealthy family with executive issues like you work with and I've worked with and think, oh, they're smart and bulletproof and they know everything. Right. The reality is they're just people too, right? They don't know everything.
Yeah.
And they do need your advice, Sam, don't they?
No, you're absolutely right, Brian. And one of the things that you find is that just like I don't prepare my own tax return, right? There are certain things that you get beyond a certain point and it's just not worth your time, right? It's back to the old economic principle of specialization. Could I do all this stuff? I mean, maybe, but would I be doing it at a very high, sophisticated level? No, there's just not enough hours in the day to do that, and not enough space in my brain, quite honestly. And so that's where it is great that we have a community of people. And one of the things that we work really hard on is trying to cultivate relationships within the advisor community so that if we do have questions, we have folks we can go to, or we can, if somebody comes to us and it's just not the right fit, we're not gonna take on a client that we can't. If somebody came to us with a 144A issue, we would turn and we'd look at somebody like you and say, you should really go and talk to somebody like Brian, because that's going to behoove them much better than us trying to reinvent the wheel when that's really not our specialty.
Well, that's one of the cool things about the financial advisor world and the independent space, that we all can collaborate. Firms can work together, and in the broker-dealer space, it's hard to do that.
Yeah.
In our space, you can help me with valuations on private. I can help you with public, and we can all be happy and work together and not steal each other's clients like they try to do at wirehouses and stuff like that. So it's fun. The collaboration is fun, and that's really great.
No, I agree. It is, and you learn something, right? You learn something along the way, and sure. I feel that's a cool part of the business too. Is I don't think I go through a day without learning something, and that's neat.
Yeah, that's really great. And no situation is exactly the same, is it?
No, exactly. And you could be looking at very similar. A lot of the companies that we're dealing with are between, probably 10 and 50 million in revenue. So a lot of times they're overlooked by your mid-market investment banks, right? They're not at $100 million. And so they may not be getting the same type of advice. And at the same time, they may not be in a position to hire. If you're a company doing 200 or 300 million in revenue, you may have some operational consultants that you work with over time, and you may be able to pay to get a valuation every year so you know about where everybody in the family stands. But for these smaller businesses, it's a bigger outlay of money, and it's nice for them to feel like they have somebody who can go and help them get similar service, high quality, well thought through plans that they might not be able to get because the mid-market banks just aren't looking at them. And it's too bad, but it creates a nice space for us to add a lot of value.
It really does. And taking it a step further as to the family office world, some families are wealthy enough that they can hire their own team and do valuations and do money manager evaluations and do financial and do everything. And then some are smaller where there's outsourced family offices, or we have 3 or 4 families together in a group family office, right? Mm-hmm. And they can do it that way. Or wealthy families that are not quite at the 100 million level, for example, they can work with folks like you or I and others who have some of that knowledge. And it's a really great way to add value to the people above the mass affluent market that don't really need those issues. 90% of America probably doesn't need a lot of this work.
Right. It's a very good point. It's a very good point.
In the areas though where we can really help them and you can help them, it's quite impactful. It really is.
Yeah. Yeah. And it's they're, because the community is a little bit smaller, it's a little bit tighter. And so the referral work, you do good work and people are going to tell their friends about it because, a lot of the folks that we work with, they're involved either with trade associations or purchasing groups or various other organizations, local economic development organizations. And, they talk to each other. And we found that a great way to get through to a lot of our potential clients is through education. And we do a lot of webinars. We go to a lot of conferences and do educational talks. And really for us, it's about just getting people to start thinking about, because everybody knows eventually, well, I can't run the business forever, but they usually bog down in your day-to-day to-do list. And so just getting these ideas in front of them early, I think makes a big difference. Because like in all planning, we can do a lot more in terms of turning the ship if we start early. If somebody comes and says, "Hey, Sam, I need to get out of the business by the end of this year," we can help you, but it's not going to be as impactful in terms of, especially if you don't already have a business that is very well run. If we need to make some changes, 6 months is just not enough time to do it.
Yeah, there's tax structures and things that need to be done over a long period of time.
Yeah.
Excellent. Well, this has been a really unique discussion, Sam. I think our whole team that's listening out here is all the better for it. And I think you run a unique business that only a small cadre of our team in the financial advisor world does this, and it's really fascinating. So folks can work with you, and they could contact you in your office in Baltimore area. Where exact are you? You near Timonium or?
So we're in Kensington actually. So we're kind of DC's here and Baltimore's here. We're kind of here. So we're in between DC and Baltimore. Yeah. So Montgomery County, Maryland is where we are.
Okay. And that's a great area. Certainly an area that's created lots of wealth as well.
Yeah.
Lots of companies, East Coast. Very nice. Good. Well, thank you, Sam. I think we're coming to the end of our time, and I thought maybe it'd be a good idea if there's any other major message that you would like to tell everybody about, what's the best way to build this kind of business, and a message you'd like to send our cohort of financial advisors out there in America today.
Yeah, sure. No, happy to do that. I would say two things. Number one is really focus on a niche. It's a lot easier to market because at the end of the day, what we're doing is we're selling trust, right? Yes, we have to have specialized knowledge and all of that, but people have to trust us first. And so really getting in and figuring out what a niche is. And so my suspicion for a lot of folks out there, because this is what worked for us, is do a little cross-sectional analysis of your clients and line it up against what your ideal client would look like. Because I bet you most folks have some similarities between the clients that they're working with currently and that they like to work with, right? Because it's important to like the clients that you want to work with. And so I think a niche helps with that because it just builds on itself. And then the other thing I would say is just don't be afraid to collaborate and reach out to each other because we're stronger together.
We are. Absolutely. Well, great. Well, thank you. Thank you, Sam. This has been a really fascinating interview and a very unique one. But I think all of our advisors in our cohort around the country need to hear. And I think it's great. You bring to the table some unique things that others don't do. But if you work in these areas, you can really develop a very, very unique practice with super wealthy people. And it's not as hard as you might think, is it?
No, it's not. It's just like anything. It's getting that snowball rolling, and you meet the first couple people, and that's really challenging. But pretty soon you're 10 years into it, and businesses. Yes, we still do marketing, and we love to do educational sessions, but I'm sure with you guys, Brian, we have people reaching out all the time to work with us. And that's great. That's wonderful. And I think everybody out there can do that if they find the right place to do and develop that specialized knowledge.
And we feel the same way. We try at FourStar to train advisors all across the country to work with corporate executives. We'll advise them or train them how to do it. And that's really exciting stuff. And anyone who really wants to learn can, which is so
great.
Well, Sam, thanks for being with us today. This has been great. I think all our brethren are going to learn a lot here from this discussion, and I'm sure our paths will cross here again. And if anybody's interested in getting in contact with Sam, let us know at Financial Advisors Workshop, and we'll connect you guys. Sam will go from there. And why don't we call it for the day? Thanks for being with us.
Hey, thanks, Brian. Appreciate it. This was great.
Great. And thanks everybody out there in financial advisor land. We're glad you joined us today for Sam Brownell, really interesting investment banker turned financial advisor, and all the uniqueness that goes with that. Fascinating stuff, great business. And so glad that we had this episode today. Let's leave it there, everybody. We will be back with another episode of Financial Advisors Workshop with hopefully someone just as smart as Sam Brownell. Thanks, everybody.